So, namaskaram and namaskar to everyone. Once again, I'm happy to be back and giving the quarterly outlook to all our investors. See, one first and foremost is happy news that Indian equity capital market is touching all-time high. That shows and reflects the general buoyancy that we are seeing in the economy, all around growth expectation that is getting built. On a relative basis, India continues to do better than most of the global economy. Therefore, the positivity buoyancy is driven by the broader optimism that is getting accommodated for India. But having said that, today's on index, we start looking at the valuations, earnings, and many other things that could get rolled out in the next, 3-4 months. My belief is the ongoing festival season, or rather forthcoming festival season, should drive the consumption growth in India, and people should look at spending more money at this time, buying clothes and other things, and consumer durables and so on and so forth. Therefore, my belief is overall market optimism will continue, buy-ins will continue. The volatility, of course, will be there, but volatility will not be as high as what we used to see in the past. And corrections, even if there will be very, very marginal corrections, but the larger buy-ins will continue to keep the market in an upward territory. I think various moving parts of India is whether it is spending by the government in building railway infrastructure, road infrastructure, power infrastructure. There has been a significant progress is being made. At the same time, consumer behavior, especially on the spending pattern, so far the spending has been more on the tourism, travels, and entertainment, and pleasure trip, and so on and so forth. My own belief is the next 2-3 quarters we'll see the real spending from the households also coming in, with the festival season happening as I mentioned earlier, and therefore the sector should also do well. But having said that, this is one of the big sectors, rather two big sectors will continue to have a lot of positive momentum. One is in the auto and auto ancillaries, and second is the capital goods sectors, and both of them become the larger beneficiary at this point of time, given the fact that a huge amount of investment is going in building infrastructure on one side. Make in India is actually building private sector investment coming back, and therefore the factories are being built, therefore that capital sector is doing well. And third, from autos point of view, the EV as a segment is also becoming now that segment to a focus from everyone in the country, including renewable energy types. So therefore, there are many companies who have got engineering capability in the country are now beginning to see that benefit being accrued to them. Therefore, on a broader basis, I would say the majority of the sectors which are domestic driven, local driven, are all now reaping the benefit of the change in buoyancy. So I think RBI would continue to keep the rates on hold, and they may probably change their view a little bit, keeping in mind the global interest rate movement from a neutral to a bit of hawkish kind of things. But it appears as it stands today, RBI will take a neutral call. Also, it looks like though US rates have been going up, and for a variety of reasons, but that's not for a change. Emerging market interest rates have remained either at the same as what we have seen in the last 3-4 months, for a variety of reasons, including the flow of funds in India is good, and currency reserves have been much better. Currency volatility is much better today compared to the earlier years. And inflation, thanks to the government taking proactive measures in keeping the inflation under control. Even inflation-led worry in India so far is not affecting so much. Therefore, the RBI policy, I think, should continue to keep a neutral, continue to keep the rates low, but the tone of outlook would keep it more cautious, given the fact they need to get aligned to the global outlook as well. I think clearly the best way to actually look at participating in mutual funds One, have exposure to diversified equity funds such as large cap and multi-cap funds or even flexi-cap fund. That's something one should kind of keep it as a core investment principle for investing. Second, of course, the hybrid funds such as the balance advantage fund, taking into account high interest rate on one side, also the current equity market where it stands today's valuations, so on and so forth, dynamic movement of change, which money manager will do in terms of asset allocations. Therefore, balance advantage fund could be one category. For third category, which of course as it stands today, I think we also mentioned about the gold as an asset class in the overall scheme of thinking investing. Therefore, multi-asset allocation fund which invest in equity, which invest in fixed income, which also invest in gold and silver and asset class, and also REIT and InvIT. All the four asset class comes in one, and money managers keeps actually making these allocations as the defined objective of the schemes in certain formula. Maybe that's the fund I think could be more ideal to build your portfolio, keeping in mind the exposure that's there in all the four different kind of asset classes. It's actually serves the purpose of investors' need. Therefore, multi-asset allocation fund could be one of the fund that can be looked at. I think, of course, we do as an industry leader and a participant have a conversation at regular interval with the regulator as well as people in Delhi who are the policymakers and Reserve Bank of India for a variety of reasons. I think one such things I would like to maintain or rather suggest is or rather highlight is the ease of doing a business is a single point of mantra that is coming from everyone. I think one such thing which I can mention probably for the mutual fund and capital market point of view, the ease of doing business, onboarding of customers, one click kind of onboarding of customers through KFC is something now being thought about. In all probability, we will next 3-4 months we'll see some progress being announced on this. Second, from a Delhi point of view, a clear focus on maintaining fiscal under control, which is so far you have been extremely successful thanks to one single factor. Tax collections have been going up quite significantly. Therefore, there is a significant focus being given to increase the overall tax collection to ensure that every moving parts in the country adhere to the taxation regulation, taxes and law, and therefore they paid their tax that they have to pay. Therefore, overall fiscal could come under control. My belief is what policymakers are doing in Delhi is to ensure tax collections becomes such a robust thing. The fiscal it comes under control. Therefore, the economy will continue to have enough money to invest. So once again, thank you for listening to this video and my message. I also take this opportunity to wish each one of you the festival greetings, which of course starting with Shraddh sometime in the month of October, followed by Navaratri and Diwali. This time, as is known, that all festivals got delayed. But never mind, I think the festive season always gives the necessary joy. So I take the opportunity to wish everyone a festival greeting.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।